At the conclusion of its March 2023 MPC meeting on Tuesday, the Central Bank of Nigeria maintained its hawkish tone by 50 basis points to 18%. That's the MPR. This is consistent with expectations for slower tightening measures to stifle inflationary momentum, as all members voted to keep asymmetric corridor at plus 100 basis point and minus 700 basis point around the MPR. The CRR at 32.50% and the liquidity ratio at 30%. That's the CRR was left at 32.5% and liquidity ratio at 30%. This is the sixth session in the last 12 months in which the policy rate has trended higher, and the Apex Bank has foregone growth in order to maintain price stability. The cost of funds for businesses is expected to rise as the monetary policy rate was raised to 18%. At the last MPC meeting in January, the committee raised the rate to 17.5%, that's 17.5%. The CBN Governor, Godwin Emefiele, who spoke after the meeting on Tuesday, cited concerns about rising risk and price adjustments in the run-up to the removal of petroleum subsidies, rising prices of other energy sources, continued exchange rate pressure, and an uncertain economic climate as factors in the policy rate adjustment. Some analysts believe that raising the MPR without addressing other factors driving inflation will not produce the desired result. It is expected that raising interest rates will keep inflation in check if other variables are kept in check, as been done in other countries. The scarcity of the naira and high interest rates have also steadily increased the cost of goods and services, with forest scarcity having a significant impact on production. Now, let's quickly give you some key takeaways from the MPC in case you did not get to watch that on Tuesday. Let's quickly take that, guys, if we do have it right now. Of course, the decisions that were reached on Tuesday included the MPR was raised to 18% from 17.5%, while liquidity ratio was left unchanged at 30%. What else? CRR, so many numbers, you know. CRR was left unchanged at 32.5%. The MPC kept asymmetric corridor of plus 100 and minus 700 basis points around the MPR. Some of the key takeaways also included a few of the things that the governor did mention, that the domestic and global economies outlook are hampered by downside risk. The MPC also did say that the Nigerian economy is to recover at a moderate pace. You will recall that the full GDP growth rate for 2022 came out at 3.11% according to the National Bureau of Statistics. High inflation, rising debt, and debt servicing costs continue to remain headwinds in the country, especially also fiscal balances that are worsening. Nigeria's economy is to grow by 3.03% this year, according to the CBN. The IMF had predicted 3.2% growth for the Nigerian economy, while the federal government had predicted 3.37% for the economy. Now, still moving ahead, the MPC was not silent on what we've seen concerning bank failures in the developed economies. And the MPC did mention that US and Switzerland bank failures on the Nigerian banks were assessed. In fact, the CBN governor on Tuesday did say that no Nigerian bank is exposed to the Silicon Valley Bank, that Nigerian banks are insulated from emerging failed banks' contagion because of the stringent prudential guidelines that have been put in place so far. And still at the meeting yesterday, just to elucidate on some of the prudential guidelines that the governor of the central bank did state and why the Nigerian banking system is still remaining resilient, he did mention that the NPLs dropped to about 4.2%. He also did mention that the capital adequacy ratio in the banking system was at around 13.7%. He did also mention that return on equity about 21%. The loan to deposit ratio was at 52.7%. He did also mention that why this is because that the CBN is not really focusing on the banks so that the banks don't engage in over trading. The Central Bank of Nigeria's governor, Godwin Emefiele, also on Tuesday did mention why we're seeing resilience in the banking sector, that the CBN is looking at the approach of bank depositors are more significant than the shareholders, and he did buttress the point with some of the actions that have been taken over the last few years, or even before he became the central bank governors, as the size of depositors funds in the banking sector is 5 times or 7 times more than the shareholders' funds. The CBN governor did mention that the banking license is a privilege and not a right, and that the banking depositors are more important and significant than the bank shareholders. If we still go ahead with the key takeaways there, he did mention that the MPC is focusing on price stability. In the last 2 months, we've seen price hikes, the January price hike to 16.5% to 17.5%, 100 basis point hike, and now 50 basis point hike from 17.5% to 18% in this March meeting. The MPC is also focusing on the lingering fuel scarcity. That should be for the NNPC Limited and its stakeholders in that sector. Rising energy prices, of course, electricity costs have increased. FX rate pressure, that is still impacting, especially the cost of doing business in the country and the cost of production. The street market rate of the naira to the dollar is around 7.4. Okay, it appreciated to 7.48 a bit, but it's oscillated between 7.48 to 7.50. The MPC has also called for attraction of portfolio and foreign direct investment. It called for increased coordination of monetary and fiscal policies. And I wonder what that is, because the MPC is always calling for this coordination all the time, despite the permanent secretary of the Ministry of Finance always being in that meeting. It also urged the fiscal authority to increase non-oil revenue to lower fiscal deficit and public debt. Nigeria's debt is currently at around 44 trillion naira, excluding the ways and means of about 23.7 trillion naira. All right, with what you've just seen on the screen, in case you did not get to watch that, let's quickly take some excerpts from the meeting from Godwin Emefiele. And when we do return, I'll be taking you through the news briefly. And my guest will be joining me today, Dr. Hassan Mahmoud, who is the Director of Monetary Policy Department at the Central Bank of Nigeria, to give us more insight as to why those decisions were reached at the MPC and what are we likely to expect. The Central Bank governor did give an indication that we may see rate hikes, but it may be moderated, not aggressive as they used to be before. Just let's gauge the market and see if the MPC is also gauging the markets, especially after the announcement. All that will be when we return.
Questions. I think the first question from Oyin bordered on the fact that she said that the latest figures from National Bureau of Statistics indicate an upward trend in inflation, with inflation standing at 21.9 as of February 2023. And what other strategies are there left for the monetary policy authorities to reverse this trend? Well, first, I think we must appreciate the fact that between April 2022 and August 2022, we're seeing a very steep rise, a very steep slope in the rate of increase in inflation rate in Nigeria. The rate of acceleration was quite steep. But by around May, from the May meeting, when the global pressures on inflation began to show real signs globally, we also started to raise MPR, albeit in an attempt to tame the aggressive rise in inflation. And what we saw is that because of the action that we have taken, the rate of increase in prices, which is inflation, had begun to decelerate. For instance, between April and August, the rate of increase in inflation was about 5%. But between August and even now, the rate of increase in inflation is only about 1.4%, right? Because of the tightening measures that have been adopted by the CBN over this period, which, yes, what one would expect is that because we're tightening, inflation should immediately begin to drop. It doesn't happen that way. What you will find, particularly in our environment, is that as you are tightening and you see, or before you start tightening, and you see inflation moving very aggressively, and you begin a policy of tightening, what you want to do first of all is to stem that rate of increase before you begin to see a reduction. Once you achieve the kind of moderation in the rate of increase of inflation, the next thing you're going to begin to see is that it should begin to come down as you continue your tightening policy. That is what we're doing. Whereas you will see that the transmission mechanism in some economies is that it's almost direct. As you are tightening, you are seeing inflation trending downwards immediately. But it differs, the rate of response differs from one economy to another economy. The Monetary Policy Committee was comforted at this meeting that the fact that the tightening measures had started to reduce the rate of increase in prices, which is inflation. We believe that as we continue this process, that inflation will eventually begin to trend downwards. Are we optimistic that, for instance, this March meeting, are we optimistic by May, inflation would have started to trend downwards? No, we're not that optimistic for a range of factors. Whether we like it or not, between now and May, or the end of this administration, we expect that subsidy will disappear. Subsidy removal has its own implication on prices, which is inflation. So because monetary policy is not optimistic that prices will continue to come down because of these measures, but monetary policy feels that we need to continue to tighten. And that's what we did at this meeting. What would also continue to be the strategy? The important thing is for us to continue to look at what is the margin between policy rate and inflation. The margin between policy rate and inflation has remained wide, which is negative real rate. And in economics, when you find negative real rate, it is a disincentive to even investment. And so everything has to continue to be put in place by monetary policy authorities to see that we reduce that margin or that gap in the negative real rate by ensuring that inflation comes down. And whatever needs to be done to rein in inflation, we have to continue to do so. So that will continue to be the strategy, but we'll do it more moderately going forward because we are conscious of the fact that when you over-tighten, just like we have seen in the US and in Switzerland, that it could begin to have contagion effect and negative impact on banking system and financial soundness indicators and financial system stability in an economy. So those are the kind of balance that we're looking at monetary policy to see that, well, whereas we want to continue to tighten so as to rein in inflation, we must do it in such a moderate manner that we try to achieve the moderation in inflation rate, but at the same time, without creating financial system instability in our economy. Unfortunately, that is where we are because of the uncharted territory that we have found ourselves arising from various geopolitical tensions that we have seen all over the world. So what am I saying in summary? The strategy would be, how do we reduce the gap in negative real rate? To reduce that gap in negative real rate, we will continue to tighten, albeit moderately, to ensure that we achieve the level of inflation, which may rather now be over a somewhat prolonged period of time, so that if you do it more aggressively, it could have some negative impact on banking system stability and financial system indicators, financial soundness indicators. So that will be the strategy. difficult balance, but that is the job we have to do, and we have to make sure we do it correctly. The second question talked about the fact that we should please try and look at the level of exposure of Nigeria's financial system, especially startups in the SVP. Like I said earlier, immediately this happened last week, you had to earn some relatively high yield. And the reports that came back to us is that there is no direct investment by Nigerian banks in SVB that could result in a loss of investment there. That's on one part. But on the second part, we began to say, how are we sure that the Nigerian banking system is reasonably insulated to ensure that what happened in the United States does not happen in Nigeria? So we reviewed the various prudential guidelines were put in place. Nigeria, like I said in my discussion when I went to Joburg, Nigeria, being one of the countries, is one of the countries, or few countries in the world where we have cash reserve deposit requirement. What is cash deposit requirement? It has been there even before I started banking, that when you deposit your money in a bank, a certain percentage of that deposit is held or serialized at the Central Bank of Nigeria to ensure that when there are kind of liquidity crises, that money is available to that bank for them to use to solve that liquidity problem, so that depositors don't lose their money. Two, we also have liquidity ratio, which is an indices of specified liquid assets against total deposits of banks, either held in cash in bank vault or bank balances or money at call, treasury bills, OMO bills, and different other liquid instruments. And in Nigeria, our ratio is minimum of 30%. Banks keep above that. Today, liquidity ratio is almost about 43%. Cash reserve, we all know, just like we read, is about 32.5%. The loan deposit ratio, which means that banks are not over trading, is just about 52.47%. But we are happy that in spite of maintaining these prudentials, that the banks still remain profitable. The ROIs, the return on equities or return on the profitability ratios have remained, I would say, relatively strong, even though when banks convert those profitability from naira to dollar, they seem weaker, but at the same time, the Nigerian banks have continued to make profit and they have continued to pay good dividend to their shareholders. So, in sum, we will say that the Central Bank of Nigeria has put in place prudential prudential regulations or guidelines that have insulated the Nigerian banking industry from this kind of risk that we see, or contagion that we see or we saw last week in the United States. Nigeria, again, is one of those countries in the world where even after a bank has declared profit and paid taxes, a certain percentage of its profit must be set aside in order to build retained earnings and capital. If you're a small bank, it's going to be 25%, 1/4 of whatever profit you made is set aside and built into what we call the statutory reserve fund in order to improve the capital of that bank. If you're a big bank, then it is reduced to 15% of your profit after tax that is held back to build your retained earnings and your statutory reserve fund towards ensuring that your capital adequacy ratio remains strong. So I believe we've done well. Customers, the central bank has done that. But I think at this time, people should now come to realization that there is good reason for putting this in place. And today is a day of reckoning where we are looking at that and say, thank God we have these prudential guidelines that have helped to insulate Nigerian banks from the kind of contagion that we've seen in the United States and Switzerland since last week. Nancy said that in the aftermath of the Supreme Court judgment, what is the current status of money supply and all that. Money supply has various components, but I think what is important that I think you'll be looking at is the currency in circulation. Before the Naira design, we said there was about 3.23 trillion Naira in circulation, out of which only 500 billion Naira was being held in the banking system, and 2.72 trillion was being held outside the banking system. And with the Naira redesign, current, and it was published even in the newspaper yesterday, currency in circulation is roughly close to 1 trillion Naira. And CBN continues to pump the newly designed currency into the market. But the truth is, at some point, we will need to reassess again to know whether the currency in circulation has attained an optimal level, so as to be able to put in place measures that will ensure that we don't go back to what we had before, where people were keeping a lot of money outside the banking system for their own personal benefits and the rest of them. 4, there are also the findings by the media indicate that a good number saw adopting alternative channels other than cash, that some of the online channels did fail. I must apologize. Yes, online channels fail, but no doubt it was a result of the deluge of volume of online transactions that hit the banking industry. And I think it's currently being resolved, and we are following up on daily basis. Our payment system management department follows up on a consistent and daily basis with the banks to ensure that where there are downtimes, they are resolved as quickly as possible, so as to make sure transactions go smoothly. I know that some of our Nigerians will say that some of them had persisted, but those are very, very isolated cases where I will say that they had persisted. But everything is being done. But of course, I think at this stage, I must really thank some of our fintechs who have some idle capacity, have been able to use those idle capacity to boost their online payments, and they have made a lot of money from that, because online payment in the fintech sector has actually increased quite astronomically. And we are happy that rather than relying on just only the banks, we have many other channels through which online banking, online payment services can be done, so that Nigerians don't suffer because we're insisting that we have to go cashless. Bukola Seto said that in the process of carrying out the campaign for the adoption of e-Naira, what is the adoption rate of the e-Naira? I can only say that the adoption rate continues to increase and improve, and everything is being done to continue to make sure that this continues to go up. For instance, the e-Naira, the report that we have shows that the e-Naira has emerged as the electronic payment channel of choice for financial inclusion and targeted social intervention programs. Within the last 18 months, when the e-Naira was launched, we've recorded over 13 million wallets. And these wallets are categorized based on their level of usage, with 12.6 million at tier 0, 11,354 at tier 1, 367,000 at tier 2, and 9,649 at tier 3. But one notable example of areas where the e-Naira has been adopted, and I think we must thank them, is the Ministry of Humanitarian Affairs and Disaster Management and Social Development, which has expressed keen interest in our e-Naira product. For instance, as on March the 20th, which was just days ago, approximately 4 million wallets were created, especially for social intervention payments, representing about 30% of the total wallets created so far. These wallets were created in response to a request from the ministry as part of plans for the next tranche of the conditional cash transfer program, which is scheduled during the second quarter of 2023. There are other very good and encouraging data that we've seen. Like I said, number of e-wallets created is about 13 million Naira, 13 million of them. The value of e-Naira transactions has reached almost 22 billion naira, which is a 68% increase since the beginning of this year. Over 10 billion naira of it had been minted, and about 3.429 billion naira of it is currently in circulation. So I would say we've seen good progress in the adoption of e-naira. We're happy that as we try to move more and more towards financial inclusion and get people away from being exploited from the financial system, that e-naira remains one very, very portable option for you to adopt. That at a recent conference in South Africa, the CBN governors, right, and is asking that I was reported to have advised Nigerian banks to ensure tighter regulations, not just Nigerian banks, banks generally, to guard against a run on the banks. Can you explain? Can you take us through the systemic health status of the Nigerian banking industry? I think I have some data here. Like I said, that we had put in place a couple of prudential guidelines to insulate the Nigerian bank, and that we say and make bold to say that the financial soundness indicators in Nigeria, in the Nigerian banking industry, shows that Nigerian banks remain very, very resilient, not just resilient, but very, very resilient compared to what we find in other climes. For instance, capital adequacy ratio, which is meant to be between 10 and 15%, today is about 13.7%. Non-performing loans ratios has dropped to 4.2%. Liquidity ratio is about 43%. Return on equity is at least 21%, which we think is reasonable. And like I said, NPLs at 4.2. Cash reserve today, aside from the special bills that we're keeping, we are today holding close to about 14 trillion naira in cash reserve deposit from banks. This is good liquidity that is meant to actually act as insulation just in case of problems. Also, on the loan deposit ratios, the banks today are just at 52.7%, which means they are not over trading. They are diversifying their portfolio to ensure that they have ample liquidity or ample zero risk investments or securities where they make money, but at the same time, depositors' funds remain protected. What we saw at the aftermath of the SVB program in the United States is that the government came out to say, the United States government, President Biden himself came out to say that that all depositors of SVB or the other bank, that they will be paid all their monies, notwithstanding the fact that what is secured, what is guaranteed is $250,000. This is something that even Nigeria will have been doing on our own, from collab, either as a result of certain guidelines put in place, prudential guidelines put in place by the CBN, or as a result of collaboration between the CBN and the banks. We have made sure that even when banks are taken over by the CBN, that whereas the shareholders may lose their investment, there are no depositors, as far as I know, since 2008, has lost its deposit in Nigerian banking industry today. Not one. It is because we insist that, yes, shareholders today, from our own standpoint in CBN, are seen to be less important than depositors. In fact, we've gotten to a realm where we're beginning to see that banks are owned by depositors, not by shareholders. Because if you look at the balance sheet of an average 5-year-old bank today, the size of depositors' funds is at least close to between 7 to 10 times of shareholders' funds. And that's why we come out very strongly when we find shareholders misbehaving in banks. We do not spare them, because we will continue to repeat that the banking license is a privilege. It is not a right. The banking license is the property of the Central Bank of Nigeria that can be withdrawn at any time once we find that the shareholders are misbehaving. this is a policy that the central bank has held on to even before I became the governor of CBN. And I know that even now, or even after I would have left office, that whoever will be governor of central bank will insist that shareholders cannot continue to have the kind of right they think they have to run a bank anyhow, run them aground, and make depositors lose their deposit. We'll rather dispense with the shareholders than make sure that deposit
briefing. And thank you for being with us this afternoon. Good afternoon.